Hello students, welcome to this discussion of this chapter 4, completing the accounting cycle. This will be the last video of this chapter. In this video, we will continue our discussion we had in the previous video of classified balance sheet. So in that video, we talk about classified balance sheet asset part. In this video, we will talk about the other liabilities and owner's equity part. Trust me that this will be a very short video. Why? Because liabilities are classified into only two categories. That's a popular classification. Okay. And what is liability? I hope you remember, because that's the thing you have been learning from chapter 1, 2, 3, 4 continuously, right? Liabilities means somebody have claim over our asset or something against which we have to make payment in the future, or we are liable to pay someone in the future. That can be called liabilities, right? So first of all, the first category we can come up with is the current liability. Current liability means that liabilities are we have to pay money to others, right? Some claim we have to pay within 1 year, some claim we have to pay within more than 1 year. That is the main criteria of classifying liabilities. So current liabilities are obligations or liabilities that a company has to pay within the coming year or within 1 year. This is called current liability. Example will be very easy, right? Think about accounts payable. Accounts payable means suppose we have bought something from someone, or we have received service from some of our supplier and we haven't provided them the money yet. We have to pay them the money in the future. That's called accounts payable. But normally the money we owe against accounts payable we have to pay within 1 year. This accounts payable should fall under the category of current liability. Okay. Think about salaries and wages payable. That means salaries and wages that your company accrued, but it hasn't paid yet to its employees or workers. That's a liability. And normally employees or workers, they will not wait more than 1 year to get their deserved salary, right? So that due or liabilities or obligations of salaries and wages payable, your company has to pay within 1 year. This should also fall under the category of current liability. Notes payable is the important type of current liability, and it's a very complicated one. Why? Because notes payable can be of long-term nature. It can also be of short-term nature. So suppose in your exam the information is given that this notes payable have to be paid within 1 year, then you can classify it under the category of current liabilities. If it is mentioned that it will be paid after 1 year, then or after more than 1 year, then you should classify it under the category of long-term liabilities. Okay. Same thing goes for the interest payable, income tax payable, right? That means interest or income tax you should have paid, but you haven't paid yet. You have to pay in the future, and that obligation you have to pay within 1 year. That's why they also fall under the category of current liability. Think about current maturities or current portion of long-term obligation. Let me make it clear to you. Suppose you have taken a loan from a bank. Suppose you have taken a loan of 5 crore from a bank, and the bank has told you that every month you have to pay me interest, but you have to pay me the principal money 5 years. Okay, step by step. That means you have taken 5 crore taka from me. Bank is telling you that you have taken 5 crore taka from me, so pay interest every year or every month, but you have to pay me the principal not at the end of 5 years. You have to pay me the principal step by step every year. 1 crore first year, 1 crore next year, third year 1 crore, 4th year 1 crore, third year 1 crore principal payment done. What is happening here is that you have total liability of 5 crore against the bank, to the bank, right? But among the 5 crore liability, 4 crore you have to pay after 1 year. But 1 crore liability you have to pay within this 1 year. That was the contract, right? The bank has told you that you have to pay me the 1 crore liability within this year. So that 1 crore will fall under the category of current liability, and the rest of the that 1 crore will fall under the category of current liability, but rest of the 4 crore will fall under the category of the different category we will talk about in the next slide. Okay, so be very careful about this thing. So there again there are some examples. These are the example of current liabilities. We have already discussed them, and there are also liabilities we call long-term liabilities. Very simple. These obligations we don't have to pay within, or we don't have to repay within 1 year. Rather, we have to repay these liabilities after 1 year, or suppose it may take 5 years, 10 years too, right? So long-term in nature, as simple as that. Think about bonds payable. Company issue bonds to get money, huge amount of money from other sources, right? So normally bonds are a special type of instrument by selling which company get money, right? And these bonds normally have maturities of 5 years, 10 years, 20 years. Some bonds even have maturity of 50 years, and some bonds even have maturity of infinite amount of time. That means they will not be paid anytime. So bonds payable are example of long-term liability. That means you don't have to pay back the liability within 1 year. Similar thing I have mentioned about notes payable. Notes payable can fall under the category of short-term liability. That means we have to pay some notes payable within 1 year, and there are also some notes payable which we have to pay within more than 1 year. They fall under the category of long-term liabilities. There are other things like deferred income taxes and other. These will be discussed in detail in advanced level of accounting courses. So these are also fall under the category of long-term liabilities. Okay. We are done with the liability part. Unlike asset, liabilities are only classified into two categories. That's the popular way of classification. Then we have the owner's equity part. The owner's equity part is very simple. If it is proprietorship, we have an account called owner's capital. We get the value of the owner's capital from the owner's equity statement. Very simple. But since we are dealing about companies, there is an example of a shareholder equity part of a company. Shareholders are the owner of a company. So shareholders equity means owner's equity, the same thing for the company. Shareholders equity is mainly classified into two categories. There may be other category as well, but don't worry about the classification of these things right now. You will be taught about them in detail in a separate chapter only dedicated for your understanding about the company financial statement and company transactions. Okay. For now, just think about that. Common stock means the money paid by the owners or the money invested by the owners from their pocket. Retained earning is also another part of stockholders or owners equity of a company. Retained earning means the profit the company has accumulated and have kept with the company rather than distributing that profit to the shareholders. So on that money, shareholders have the claim. So retained earning is also a part of shareholders equity. Okay, this is how we classify the owner's equity part. Very simple. So with this, we conclude our discussion not only of this video but also of this chapter. So I hope we will meet again soon with another video on a different chapter. Till now, thank you for your patience. Okay, and best of luck.